All right. We are live Monday, 3 p.m. Pacific Standard Time, like we are every Monday, answering your questions about mortgage, real estate, the market, recession, housing crash, interest rates spiking, all the other stuff you guys want to know about. So feel free in the comment section, fire away with whatever questions you have. I'm here. I'm happy to answer the questions. Like it or not, I'm going to shoot straight with you. Some people, like honest answers. Others just want someone to tell them what they want to hear. But I'm here to give you my honest feedback. Like many conversations I've had and I'm having currently, gosh, I must have had back-to-back like 12 calls today. Agents, clients, and what I can tell you for certain is that there's uncertainty in the market. Buyers are uncertain with interest rate changes, whether they want to buy, whether they want to upsize, downsize, sideways size, move neighborhoods. Investors are unsure, like, should I buy a duplex? Should I buy a single family? Should I not buy at all? So hopefully I can provide you some clarity a little bit about what's going on in the market in terms of not just interest rates and what interest rates are doing, but just from a, consumer psychology perspective. I did a video this morning. It's going to come out tomorrow just on recession. And there's massive amount of things out there. Stock market analysts and others saying we're likely to see a recession, right? With unemployment numbers where they are, with inflation where it is, with the 2-year and the 10-year treasury at inflection points and being inverted like they are, like we're going to see a recession in the next 6 to 24 months. It's guaranteed, right? 75 years of history and these things, when this happens with the 2-year and the 10-year being inverted, a recession follows. When this happens with inflation and unemployment numbers being where they're at, a recession follows. But what does that mean for real estate, right? If you go back and look, and this is part of the video that is coming out tomorrow, so check out, tomorrow's video, 2 p.m. Pacific Standard Time. I released those on Tuesday. It just talks about what's happened over the last 40 years, my lifetime, with the recession and real estate. The one recession that was tied to a financial crisis, which was tied to a bunch of funky stuff going on in mortgage and real estate, of course, real estate declined. But all the other ones, it stayed flat or it went up. So I think that's something interesting for people to look at and follow. Anybody who's banking on the fact that real estate is going to go down in value over the next 6 to 12 months or even the next year or two, I just don't see it, right? Like, and maybe I'm glass half full, rose colored glasses. I don't know. Like, so much data out there. Like the demographics of the people that are buying the homes, the 34 to 36 year olds, like that number is growing. All the numbers that there are out there on new construction starts and all that, they can start a lot of new homes. They can build, but if you're talking about like closing the gap on the humongous amount of shortage that we have, supply versus demand wise, we're not there. So I know I titled this one interest rates. I'll talk about those a little bit. Continue to see days like today where it's just higher than it was the day before. I think as of last check, and I'll pop it on the screen real quick so that you guys can follow along with me. I got to make sure I don't have anybody's information on my screen. Yeah, we lost 75 basis points today. Holy majeezers. It's just like Groundhog's Day in mortgage, right? Just keeps getting worse every day. As far as rates are concerned, right? I'll show this screen here where I subscribe to MBS Highway. On the left-hand side of the screen, this is mortgage-backed securities down 75 basis points. This is a stock market index. And on the right is the 10-year treasury. In general, when the 10-year treasury goes up, it went up 6 basis points today to 2.77. That translates over here to mortgage-backed securities being down. When mortgage-backed securities are down, that means mortgage interest rates are up. And, here's basically mortgage since January 18th, starting up here on the left, a steady downward trend. And January 18th, just roughly, I can tell you we were mid threes. So from that point right there, 105.47, holy guacamole. It's like 550 basis points different. About 1.5% difference in true rate, right? So on a 30-year fixed rate, I've showed this before, where you can just go to Mortgage News Daily, quick and easy way. Go down here on the right and just click on 30-year fixed. This will give you an average across the country, right? Just click on today's mortgage rates. That's showing that it's up 0.19, almost 0.25% in a day. In a day. Average across the country, 5.25, with 0.4 points being paid. It'll give you like the daily chart down here. Check this out. Know that like perfect scenario, working with a broker, you're probably going to be able to find lower than that. But it'll at least show you the trend, right? Where we actually saw a good day last Thursday, and then worse, and up 0.09, up 0.19, year over year change, almost 2 full percentage points. Yowza. I think it's more than that, right? It was, I guess August was the low, where like 2.6. Nonetheless, it is what it is. For investors, you run numbers at a new interest rate and things either pencil or they don't. And as a home buyer, it's relatively similar, right? Like you've got a monthly payment you can afford. You've got a 30-year fixed rate mortgage, and whether, it's $3,400 or $3,100, you still just got to figure out, am I comfortable with that payment? Is it something that I'm comfortable with moving forward? Do I have job stability? Would I prefer it to be $3,100? Of course. But can I afford it $3,400? Yes. All right. Well, if you still want to buy a home and all the other benefits that come along with home ownership, you're going to do it at $3,400 a month. If rates go down, you might be able to refinance in the future. If rates go up, you're locked into that, rate that might seem high today, but might seem like a screaming deal 6 months from now. So anyhow, thanks for joining, Alex. Appreciate you having you here. Hopefully that wasn't too much doom and gloom over the first 10 minutes for you. C. Fleming, what do you think 6% rates by the end of the year? It's a possibility, although like just my basic thought process is that we know what the Fed is doing is causing interest rates to go up. I believe that like when there's a difference between what we expect and what happens is when we see more volatility. All the things that are happening, we should be expecting. So there shouldn't be too much extra volatility in the mortgage-backed security market as the Fed, does these interest rate increases to the Fed funds rate. We expect that. They've talked about it, right? So most of it should be baked in. How they run different securities off their balance sheet, whether they do that faster than expected or slower than expected, that's the thing that we're not certain about that could change mortgage rates in the short term, but we shall see. All right, Kevin. Good evening. Thanks for joining from Florida. Good to see you. Pallavi Patel, thanks for joining. Tee up your questions, folks. I want to answer as many questions as possible. It's like a Gary V presentation, right? Where like I can talk all I want about the same old stuff, but your specific questions are going to allow me to dive deep into specific concerns you're having, specific things that you're thinking about, and rest assured that you've got the question, other people do too. And so by diving into specifics, we're able to serve more people at a higher level. So please fire away with any questions you have. All right, Eccentric. The Fed must lower the real estate prices because that's the only way to stop inflation. It's the housing wealth effect in the opposite direction. Not sure I completely understand all of that. Housing prices must deflate in order for inflation to drop. Housing is the biggest asset in a normie's portfolio. They'll continue to spend if they believe they're getting rich through their home. Spending will only stop when their house prices drop. I don't know if I'm fully on board with all that. I appreciate the housing prices crashed in the early 80s and 90s. All right. I might have to call Maury Povich on that one. That might be. I don't think real estate prices crashed in the early 80s and early 90s. I literally was just looking at this graph. Let's see. Let's see what we got here. Man, where did I put that? Real estate inflation. No, recession. Hopefully I can find this graph. I literally was just looking at this graph. I'm going to find this graph. I don't think that real estate prices crashed in the early 80s and 90s. I think that's a false statement. We should probably clear that up before we go any further. Sent items. I sent this over to my marketing team today. We were, because I recorded a video on this earlier. All right. Housing prices in the early 80s and 90s. In the early 80s and 90s, we definitely saw recessions. True statement. Let's take a look at housing prices. These gray lines up and down, a little bit hard to see, I know, but these gray lines up and down are the recessionary periods. And this is 1980, this first one. Let's call that 80. Let's call this like 82, 83, whatever it was. Close enough. The blue line is housing prices. Definitely that first recession, that's an uptick. This one, you could argue prices were flat. So I'll give you that they were flat for a year. Early 90s, okay. Slight downtrend. Slight, right? Like you can't even see it on this little screen right here. If I were to zoom in, make this bigger, boom. Now you can tell, right? Like it's a very slight downtick. And then early 2000s, recession, definitely home price appreciation. And of course, the financial crisis. Wouldn't expect anything less than a huge downtick. So, yeah, this 90s one didn't have anything to do with ninja loans. I would say this is not a crash. That's about as small as a downtick as you can get. This is up and this is up for the early 80s during those recessions. So, like Maury Povich famously said, that's proven to be false. But I appreciate the comments nonetheless. Yeah, I mean, I think recency bias is the thing that causes people to think that recession equals home prices crashing because all they think about is that last big recessionary period. I mean, we had 2 months of recession in early 2020 and home prices went up, right? The beginning of COVID. And that's a little different story. But like, if we're looking at the most recent, the one that's on everyone's memory, housing crisis, financial crisis, recession, home prices crashed. And so that's the problem, I think, is exactly what you're saying, is recency bias is telling people, like, if we have a recession, it means home prices are going to plummet. Not the case. All right. Who else we got? My buddy Al Bundy. Good to see you, brother. Thanks for joining. Not sure if you know this. What happens when a homeowner goes through foreclosure and the house gets sold, but home had equity left after penalties? I would say, I'm not 100% positive, but like the bank keeps it, right? You owe $322,000 and you foreclose on a house that, you know, the bank ends up selling for $400,000. They've got some fees in there. And if there's an extra 15 grand left over, the bank keeps it. I'm relatively certain on that one. They take enough L's that maybe, like, you know, the couple W's they take can help offset that a little bit. But yeah, I mean, we're seeing far less foreclosures because of all the equity, and people are going to find creative ways to get out of it without foreclosing and leaving that meat on the bone for the bank, right? I mean, I believe this in the sense that, like, the Fed, like Jerome Powell has said it, wants to pull down demand. Like, he's said it out loud. We raise interest rates, demand comes down, the demand for home prices goes down. That helps cool the housing market off. What I think he might underestimate, or the Fed in general might underestimate, is how much of an imbalance we have. If we taper demand to here and supply is here, like, we've got an equal housing market where maybe we're flat, right? It's going to take a big pull to get us in a position where we turn that teeter-totter from here to here, right? From here to here, or here to here, possible, right? From here to here, I don't see it happening. Like, it would be moving mountains, right? Builders would have to build at triple the speed they're building now, and demand would have to just fall off a cliff for us to be in a place where housing prices pull back 20%, 30%. I mean, it just seems like a big, big shift that seems very unlikely. I don't know. I've been proven wrong before. Happy I locked in March at 3.99. Had to pay $4K, but now see it was worth it. Yeah, for sure. Anybody who's locked in the last, call it 3 months, is happy they did so. I've got one right now where we locked it on a 90-day back in January. This client was talking about, well, because of this appraisal issue, what if we took it to another lender? I was like, yeah, we could take it to another lender, and it would be 1.5% higher in rate. So we're going to iron out this appraisal issue. We're going to stay right where we're at, because we locked it on a 90-day back on like January 22nd or something. Oh, looking back, what a freaking amazing decision that was. Yeah, I mean, unfortunately, I think this is the truth, right? That's what they want to hear, right? Myself included, right? If home prices went down by 20%, I'd be a happy investor. My clients who are buying would have more purchasing power. They'd be happy as heck. It's just not in the cards. Yeah, and you're right. Rents are going up too. Rents are going up. Rents are ridiculous. You know, I see and talk to people every single day. For a simple 3-bedroom, 2-bath in Sacramento to be over $3,000 in rent. Like, I used to think, having conversations with people coming from the Bay Area, or they'd say, oh, I'm paying $4,000 in rent. I thought that was like the craziest number 5 years ago, to hear somebody's paying $4,000 in rent. And now I'm hearing about $3,200 and $3,500 in Sacramento. And I'm like, holy guacamole. And that's the thing about a 30-year fixed rate mortgage, where you get into a payment that might be $3,500, even if you can rent that house at $3,000. If you plan on staying there for 3 years, 5 years, 10 years, 20 years, what is going to happen to rent, right? Is that same house going to rent for $3,000 for the next 10 years? I don't think so. Unless you've got the kindest landlord who's independently wealthy and doesn't care about raising rents or making money, you're likely to see continued increases to rent. And some of it is just inflationary pressure, right? Like there's higher costs on a bunch of different things that the landlord is going to pass on to the renter, similar to how restaurants are passing on their increased food costs to the consumer, right? There's kind of a ripple effect in inflationary environments. Certainly seeing it in the rental market, and it's one of those things where purchasing might be hard. It might be more expensive than it was last year. It might be a struggle with getting offer accepted. But on the other side of the coin is all the struggles I hear with people that can't find a place to rent. They finally did. It's $2,700 for a 2-bedroom. They've got to pay the utility. Like it's wild what I'm hearing on that side as well. Radoni, keeping it positive. And here's the thing, man, like if people would have been preaching doom and gloom to me in 2006 and convinced me to not buy, maybe I wouldn't have. And if you look at like the chart I just showed, where we went through recession, went through the housing crash, and prices like fell off a cliff, I might have been like, happy that I didn't buy. Here I am 16 years later, still own the home, ton of equity, great renters, creating net worth, all that other stuff. Real estate for the long term has proven to be a great investment. Every single multimillionaire that you know, or vast majority of them, all own real estate. It's not by accident, right? All the stuff in the news about Jeff Bezos and all these other folks investing in real estate companies that are buying real estate and selling shares of it, single family homes, right? Like everybody wants real estate. Is that a coincidence? Is it like because it's a popular fad, or is it because it's a good long-term investment? I think we're thinking about the latter, folks. So anyhow, that's end of rant there. Alex Radoni, great question, brother. Submit an offer, get it accepted with the fully executed purchase contract and the title fees. We are going to submit your loan, lock your loan, order title fees. Once we get title fees, we're going to disclose. So essentially right after you get that accepted, the best teams like ours are literally going to do that like immediately. Offer accepted. We're getting it in. We're getting it locked. There is no reason in today's environment to not lock right away, right? Like there was some times that were less volatile than we're in now, where it's like, oh, hey, we're not in a hurry to lock. We'll wait and see. Might get a betterment tomorrow. We'll keep an eye on the market and see what happens. And we get these alerts, right? Like that the market's going to get worse and to lock now, and we might float it for a couple of days. Locking immediately on all loans, literally like every day for the last 3 months. That's been our stance, and it's helped our clients immensely. Ignorance is sin. Knowledge is salvation. All right. Salvation through knowledge that real estate is a good long-term investment is what you're telling me, right? I wouldn't want to be ignorant enough to stay a renter for the next 30 years. That's what I'm getting out of that. You know what, Flash a Light? This is a great comment. If Ukraine has a ceasefire, watch out. Dollars and treasuries will sell off and 6% will be quick. Translated for a simple mind like mine, if we see resolution between Russia and Ukraine, ceasefire, any sort of resolution that's taming volatility, right? Or taming uncertainty is bad for mortgage rates. Mortgage rates tend to do better when there's uncertainty economic, geopolitical, all of that, and do worse when things are more stable. So you are 100% correct in that if Ukraine has a ceasefire, mortgage rates are going to get worse. I agree with that sentiment, and I appreciate you sharing that. Jeanette, hello. Good to see you. You got a quick question. I want to refinance. I'm at 5.25 now. Should I buy points to get a lower rate? The answer is no. And I'll tell you why. If you've got a 5.25 now and you've got no reason for refinance, like you need cash out for a project or to pay off high interest rate debt, leave it alone. And there's not going to be enough benefit, right? If you pay points plus title fees and you're in it for $6,000 to get a 4.25, and that 4.25 saves you $100 a month, even $150, it's going to be 40 months, 60 months to break even, right? That $150 or $100 to that $6,000 in cost. I think you're better off waiting. And what might happen is you might see a recession take place and then rates tick back down. I'm not saying it's going to happen for sure, but I know a lot of smart people that are betting on this. Rates continue to go up. Recession, rates are pulled back down. Monetary policy is going to change to help us out of a recession, and rates are going to come back down. I just don't think that there's enough benefit based on this limited information. If you want to send information to me and the team, we'd be happy to help. Go to greatmortgagebroker.com and you can send us a mortgage statement. We could run the scenario for you, but my guess is it's not going to make sense. We're going to look at it and say, to get to 4.25 is going to cost this much. To get to 3.99 is going to cost this much. Don't do it. It's going to be a 5-6 year break even, and you're better off staying in your current loan, banking on it being better in the future with a lot less cost baked in. That's my honest thoughts on that one. Real quick. Drew A. You know what, my man? We are licensed in Texas. I'm, now happily powered by UMortgage, have just a great team, a great network inside of UMortgage where collectively licensed in 46 out of 50 states. I literally just got off the phone with Tyler, our guy in Texas, had a good conversation with him this afternoon. Go to greatmortgagebroker.com, fill out that form. Just let us know Texas and where you're at. My lead intake team will forward you to Tyler. He's part of UMortgage, and we'll have you completely dialed in on that. So yeah, ping us. We'll be happy to help. Yeah, that 52-year Excel spreadsheet from Zuber is super cool. Somewhere on my computer, I got that thing saved too, with a bunch of stats over the last 50 plus years. I think I paid too much. Paid too much in interest. Paid too much for your house. Paid too much for what? Not getting a home with a record low interest below 3% is a sin. Yeah, like he's saying, Jeanette, it's a tough call because rates are about where you're at now. So, you'd be paying to lower it, and it's likely not going to pencil. I mean, stuck, you're not necessarily stuck. What's the bad part about the 5.25 right now? Is the payment uncomfortable? Is there mortgage insurance? I guess I try to identify what stuck means, stuck in the fact that you didn't act in January and you could have lowered it by 2% and saved a bunch of money. That sucks. But, you're likely going to be worse off adding 6,000, 8,000 to the principal to lower it, to 4.25, because it's just going to take longer to break even than really makes financial sense. Hey, what's up, Jonas? A recession, correct, is 2 down quarters in GDP, not real estate. And that's where people are making an incorrect assumption, is that recession is tied to real estate. You can have a 20% decline in GDP, the economy is not doing as well, does not mean that real estate prices follow, right? BK Chapter 7, discharge date 3 of 21. Didn't reaffirm my home mortgage, paying monthly on time. Estimate equity 90K. Like to sell home and purchase new. You would have to have an exception in that case, to be able to do it in under 2 years. You can do it 2 years with FHA. Most lenders aren't going to be able to get an exception granted in your case. I would say you have a specific enough scenario where I would bring it to somebody. If you want to go to greatmortgagebroker.com, we'd be more than happy to help. Let us know what your specific scenario is. It's going to be tough, I think, is what I would say. All right, Antares. Recommended rate difference to refinance is at least 1%. And this is in reference to Jeanette at the 5.25. I want to answer this, and I don't mean to pick on you, but I want to set the record straight for everybody, because I've heard this a lot where I don't know where it originated, but probably had 3,000 refinance conversations between 2020 and 2021. So I feel like if anyone's an expert, I might just be. There's no hard and fast rule on you've got to lower your rate by 1% for it to make sense. And I'll give you an example of why. If you call me and you're in Ohio and you've got a 5.25% on a $64,000 mortgage, and you're looking at doing a refinance, and current rates, just for this example purposes, are 3.75%. That is a 1.5% difference, right? Okay, 1.5% on 64,000, you're going to save about $1,000 a year. And this is how I was advising people throughout this big refinance frenzy of 2020 and 2021. Take that $1,000 a year in interest savings and divide that by the total cost, true total loan costs. Underwriting, processing, points, title, anything that showed up on the left-hand side of page 2 of a loan estimate adds up in box D, total loan costs. And real quick, if you want to be a master at reading loan estimates, I put out a course. I just lowered the price to $22 where I probably get table scraps from Teachable. But you can go here, and I've got an inside take on how to read a loan estimate, how to compare loans apples to apples, all kinds of good stuff. You probably can find YouTube videos where I give similar information. In this course, I just try to collect 10 or 12 of the best videos so I could put it together as a package. And I feel like it's a pretty comprehensive course. Buy it. If it sucks, return it and get your money back. But I think for $22, a lot of people are going to find enough value to where it makes sense. Back to my point on the recommended rate difference being 1%. So you save 1.5%, which saves you $1,000 in interest. If there's $4,500 total on box D, that's a 4.5 year break even. It's one of those I don't know. I don't know if I would do that, right? 1.5 difference in rate. Now, let's look at a $700,000 loan. And you've got a 5.25, and the current rates are 4.5. On a $700,000 loan, now I'm going to have to bring out the calculator maybe because I've made it harder on myself than I had to. 75, 0.75 difference in rate, 5.25 to 4.5. Is that $5,250 a year saved? That's a lot. Same loan costs. In most cases, the bigger loans don't cost more. A lot of it's fixed costs, title fees, whatnot. So we're getting 4.5 instead of 3.75. We're going down half as much in rate, 0.75 instead of 1.5. But in this case, our break even is less than a year. That makes sense, right? And it's a 0.75% thing. So in response to this, I'm going to say, I've seen that out there. I don't necessarily agree. And the example I gave is the reason why. You can save 0.5% on $1 million loan, and it makes all the sense in the world. And I did some of those. We went from 3.375 to 2.875. If you had $1 million loan, you're glad you went to 2.875. You're locked and loaded and leaving it alone. If you've got a low loan amount, it's going to need a bigger spread for it to pencil, just on a cost versus benefit analysis breakdown. All right. End of story. Well, that's one answer for you, Natalie, unless you pay cash. Yeah, I guess that's another way of being stuck, right? You've got a 2.75, and when you look at upsizing, selling that, taking equity, going forward into a 5% rate, your payment goes up $1,200 a month. Yeah, that one's tough as well. AJ Kamath, thanks for joining. Another satisfied client and friend. Appreciate you being here, brother. The crazy part is you were paying $1,400 for a 2-bed, 2-bath. I bet you now, a few years later, oh yeah, it's now at $2,500. Holy moly. I moved out after buying a house, courtesy of Matt. Don't forget the team. The team was a big help too. And I know that, it's pleasure to work with great clients like yourself, but the team was certainly involved in that process. You had a great agent as well. So thanks for the shout out, man. I appreciate it. And I'm glad, because look at that, dude, like 1,400 to 2,500, only a few more upticks to 28, and that thing will be doubled. In your opinion, what caused the 2008 crash? I mean, liar loans, for sure. ARMs is funny because ARMs are available today, and they're a lot more responsible version of ARMs. The ARMs that were available back then were only fixed for 2 years, and then they adjusted. The funny part is they had a prepay on those loans that was a 3-year prepay. So once it started adjusting, if you wanted to refinance, you'd have to pay the prepayment penalty. It was ridiculous. But I think the biggest culprit was like lending guidelines were way too loose. Way too loose. If you could buy a home with a 560 credit score with nothing down and attach yourself to a $4,800 payment with no proof you could pay it back, of course that's going to go down in flames. Like, why wouldn't it, right? And so like the home prices going up the way they were is because people like just didn't care what they were paying. And, it's almost criminal in a way to think about the fact that like you've got to put guardrails on, and people are going to make bad financial decisions. Allowing them to do that on such a grand scale with real estate is irresponsible, right? Like giving somebody a $500 credit card when they're 18 is equally as predatory sometimes. An 18-year-old, has got soft skull still. They don't know anything. They're going to go out and spend money and max it out and end up paying back $1,800 in interest on $500 worth of sushi lunches and other BS they didn't need, right? When you 100x that or 1,000x that, and you let somebody buy a $500,000 home without the financial education behind it or knowledge of how to handle their finances and a mortgage, things are going to go wrong. So that was the biggest thing, was the lending guidelines, in my opinion. Sure, there was like appraisal fraud, and they kept like artificially inflating the price of homes for all kinds of different fraudulent stuff. You know, people taking cash out refinances of a house that's worth 300, appraised it for 700 using pictures from other homes, all kinds of shady shit. But ultimately, I think it was the fact that like somebody with not so great of credit, no verifiable income could buy multiple properties, right? And they were sold a bag of goods or a dream in that like home prices will forever go up. You can rent this place out for this amount of dollars. You'll be a real estate mogul, buy this, buy that, you know, and somebody with very little real estate knowledge all of a sudden had 5 homes, a personal one with a $4,000 mortgage and 4 rentals with $2,200 a month mortgage on all of them with no real plan or, you know, financial footing to figure out how to manage all that stuff. Yeah, there's always somebody. A funny thing to do if you ever want to entertain yourself is there's a gal on CNBC, Diana Olick. She's been against housing forever. As recent as last week, she put out an article on why it's a terrible time to buy. You can Google Diana Olick 2014 housing crash. Diana Olick 2015 housing crash. Diana Olick 2016 every single year. And I should make like a video of her saying the housing is going to crash every single year. And we'll see how that ages, right? She's been saying it for like 8 straight years. I wish I would have bought more housing over the last 8 years, not less. Yeah, just like your buddy, he was sure that the housing crash was coming. He's still waiting for it. He just keeps saying it every year. He'll eventually be right, unless housing continues to go up. Like if you look back at this chart that I have in front of me, like the housing crash, like realistically was like the only time housing has really gone down in value. Like there's been some flats, there's been some small downs. There's never been correction. Like 08's the only correction in housing. Correct me if I'm wrong. But when I look at it, and trust me, I'm no Harvard graduate. I'm not an economist. I'm not claiming to be the smartest dude in the room. But like housing crash, like 20% decline year over year. Show me one that's not during the last housing crash. Show me one in the last 100 years. I'll eat my words. I'll go on and stand corrected. The rich get rich or maintain their wealth through real estate. I mean, so many of them wouldn't be parked in real estate if real estate was not a good long-term investment. Between now and 2025, am I sure that real estate's going to go up 20%? No. But between now and 2035, I will bet you any amount of money. Real estate goes up in value. 22 to 35. Bet. No cap. That's what the kids say. Yeah, the early 80s where we're talking about like the fact that like housing crashed, 17% interest rates and home prices still went up. I mean, that was what we were talking about earlier was, this early 80s, early 80s recession, which is the gray lines, right? These gray lines on the left, home prices keep going up. The blue line is home price index. And then here, flat. Maybe that's flat. With double-digit interest rates. So, yeah, we might have 6% interest rates. We might have a recession. That doesn't mean housing is going to crash by any means. Yep, if you like it, lock it, Alex. Go get yourself an accepted contract, brother. We'll lock it up. Whoo! Flash of light. Upset for paying a quarter point to to lock your refi in 2021. That same loan now has discount points of 8. Yeah, slowly but surely, like those rates aren't even on the rate sheet anymore, right? Oh man, those were the good old days. If people knew, and I'm telling you, like it felt annoying at times for me to tell people, like, listen, we don't know how long this is going to last. Imploring people to refinance, right? Multiple properties, refinanced them all. I've got plenty of friends, family, clients where if there was something to refinance, we did it, right? And I had a lot of people like, nah, I don't know. And I'd go through the same thing we went over earlier in the video. It's a simple equation, right? It's cost versus benefit. And I'd say, listen, this thing pays for itself within 12 months. If you're going to stay here for at least a few years, there's no good reason not to refinance. People are like, I don't know. And now they're like, gosh, I should have. All right, Drew, thanks for joining. I bought a duplex last year in December at a sweet 2.875 interest rate using a VA loan. How soon can I get my next property that won't hurt my loan? I have money for the next property and look every day. When you say won't hurt my loan, nothing's going to hurt your loan. It's just going to be a matter of if you're looking to move into another one owner occupied, you've got to check your VA eligibility. Depending on how high cost of an area you bought in, you may or may not be able to buy another VA as a primary, just based on that eligibility. There's also like, how far are you moving and whatnot. But I would get that lined up first, right? Before you're even looking, which it sounds like you already are. Talk to a qualified loan officer. Hey, I'm looking to buy another property. Get that DD 214, have them pull your certificate of eligibility, get your docs in. They'll be able to guide you and tell you, yes, you can buy up to this amount. If you buy above, you've got to put 25% towards purchase or whatever the case may be. Or maybe it's buy this next one 5% down conventional instead of using VA because the VA eligibility is going to cap at a certain amount. Whatever the case, all that stuff should be ironed out so that you know what you're eligible to buy. Because what happens if you run across a great opportunity right now and then you shouldn't be able to submit an offer without a pre-approval letter in most markets, right? So get the pre-approval and all that stuff dialed in first is what I say. We are more than happy to help. I've got VA experts up and down the U Mortgage roster. So we are more than happy to help. We're trying to become the biggest VA lender in the country. So give us a shout. Go to greatmortgagebroker.com, fill out the form, let us know where you're at. Let us know you're a VA buyer. More than happy to help you there. Do me a favor, guys. Smash the like button for the YouTube algorithm. I don't know how many likes we've got on the YouTubes, but I would love to have this video get mucho likes. I don't know why. I don't know if it matters to anything, but why not, dude? Using conventional, not VA. Okay, cool. Yeah, get yourself pre-approved to do a 5% down conventional and see what that looks like. Or if you've got more to put down, great. But whatever the case, get it dialed in from a loan officer you like and trust. If you've already got somebody, great. If you want to connect with us, greatmortgagebroker.com. But have all that stuff lined up so that when you find a property, you can move on it. My family members can't co-sign for me. Will a friend be able to? I have a friend who makes $200K per year, and my DTI ratio is the only roadblock. Dude, if you've got a friend who makes 200 dimes, wanting to co-sign, it's a good friend. So for sure, if they're willing to co-sign on the loan, the 200K, if they've got a current mortgage, if they got other debts, like that's going to factor into it too. But if you're going to find a co-signer, the one that makes 200 dimes a year is certainly a good one to have. Holy guacamole. You paid 3 points at $3,200. You must have gone to Quicken Loans. Where did you go where you paid 3 points, Alex? 3,200 per points, meaning it's a $320,000 loan amount. Whew. Yeah, Jeanette, I would find somebody who you like and trust to run the scenarios. You've got a 5.25 now. You can't lower your rate, but if you do a cash out refinance, that's 20 or 30,000 in cash out. Your rate stays the same or goes slightly down to 4.99, 5.125. Then maybe it makes sense if it's going to be renovation to a home you're going to spend the next 10 years in, and your payment only goes up $150 a month. I don't know the exact numbers, but that's why it's always good to run scenarios. And I genuinely tell people, like, let's have a conversation around it so we can figure out if it makes sense. Sometimes putting the numbers together makes it really clear. And you say, you know what? That's $450 more per month. I just don't want to take on that extra $450. I don't need the kitchen that bad. Or you look at it, you go, oh, my rate's coming down a little bit. I'm dropping mortgage insurance. And so my payment's only going up $74 a month, and I can take $25,000 out, do, this kitchen remodel that I've always wanted to do. And I'm going to be in this house for at least another 5-7 years. Like, this makes a lot of sense and it's adding value to the house. Okay. You don't really know those answers until you've run the scenarios, talked to a loan officer you like and trust. So if you got somebody, great. If you don't, greatmortgagebroker.com, reach out to us. Closing on Friday, 3.5 interest rate, and didn't bid over asking. If it crashes, I have cash. And if it doesn't, I have cash. LOL. Congrats to you. Congrats on the accepted offer. Congrats on the great rate. Congrats on having cash. A major delay. Is anybody else seeing a major delay? I hope not. My internet should be buzzing. Huh. Maybe I'm just behind on the questions. Could be. Uh-oh, it's going down. Put your glasses on. Current 30-year. This is a reoccurring question. You can look at this from lots of different angles. I think the easiest way to look at this, guys, just go to Mortgage News Daily. This will give you a good enough guesstimate, right, to go off of. And here's this real quick. Again, I'll show you guys. I've got no affiliate links or anything. I just tell people, go to Great Mortgage Broker. I'm sorry. Go to Mortgage News Daily. Check that out. 30-year mortgage rates jumped to 5.25, highest since 2009. Up here, it says 5.25. This is just a survey of the 30-year fixed rate from a bunch of different lenders nationwide. If you click on mortgage rates and then you click on current, there's like a 30. You can click on the 30. Where'd it go? Come down here. 30-year fixed. Oh, there it is. You can scroll down and click on this more charts, the 30-year. It'll show you like daily what this national survey says. And, last Friday it said 5.06. Last Thursday it said 4.97. And literally it tells you, day by day, 5.25. We saw an uptick today. Holy guacamole. Just know that like different lenders are going to have, different rates. Some are running off thinner margins. If you've got 800 credit score, you're putting 40% down, you're going to have a better rate than somebody who's got a 685 credit score who's putting 5% down. So reach out to somebody you like and trust on your specific scenario, but just be ready for 5% plus. Ryan Lundquist, thanks for stopping by. Hopefully by the time I got to this, you're still on here. I was poking all around. Somewhere I saw some fresh Sacramento stats and I couldn't find them again. So tell me where that's at. Is it on Instagram? Is it on Facebook? I didn't find it on SacramentoAppraisalBlog.com. I went there and let me see. If anybody wants to go to SacramentoAppraisalBlog.com and look at what Scott Peterson's house has sold for the last 4 times it's changed hands, SacramentoAppraisalBlog.com is the place to get it. You had some fresh stats up today for Sacramento, Ryan, and I lost them. I lost where I found them, but let me know, direct me, because I was literally checking to find those before this. I appreciate everything you do. Great stuff. I shouldn't be the only one that's got access to your great stuff. So I'll put this up right here. SacramentoAppraisalBlog.com. Go check out that. Ryan's got great stats, great information about real estate. He's just icon. Oh my gosh, I need to drink some water. Bought in Fort Myers, Florida, went under contract for a new construction in September of 2021. Paid about 18 over asking, closed March 31st with a 4.125 rate. I now have 105,000 equity. That is amazing. Florida has been on fire. Congrats to you. I'm guessing 4.125. Yeah, you probably, I guess, locked it sometime in February or March, right? If you would have locked way back when, it probably would have been even better. But nonetheless, you're like 1% lower than what is today's market rate, and you've got 105,000 equity. So that's a home run. I'm ecstatic for you. I think a lot of people on the stream are probably jealous of you, but congrats to you. You got in there and bought something, and you're in a great position now. So congrats. Thanks for the kind words too. Valuable, essential knowledge during the process. Don't be a stranger now. Keep staying tuned and asking questions. And what I love too is after some people have bought, they stay interacting with the channel. They stay interactive, and they give hope to other folks. Hey, don't give up. I tried for 3 months and put in 14 offers. I finally got one accepted. I'm so happy that I did. I'm now here. I'm in my house, and I'm happy about it. So stick around, Danielle. This is a good question, Matt. Have any of your mortgages defaulted? What does it look like on your end when it happens? As a mortgage originator, we're only really going to get notified if it defaults within the first 6 months. Once it's more than 6 months old, it's been sold to servicing, and it's basically like in a different bucket. Mortgage loan originators, brokers and retail lenders alike, once it's past that 6 month EPO period, which if it gets paid off or some form of default within the first 6 months, it can come back to us to basically have commission clawed back. But beyond that, I wouldn't even really know, to be honest, like 2 years down the road if something defaulted. Looking back, I should have bought a beach house with a liar loan, rented out my primary, and enjoyed the ocean breeze until the banks kicked me out a few years later. Oh, that's a good one out. I mean, the crazy part is I knew so many people that knew that it would take the banks a year and a half to foreclose. So they lived rent-free, mortgage-free for a year and a half. What crazy times that was. All right, Alex, bank statement loan. That makes sense. You talked about paying 3 points, and I think that's likely the reason why. Man, no delay here, but no delay now. There was a delay. That sucks to hear. I'm telling you, AT&T was in here trying to sell me some high-speed internet. I think that they're the ones that are slowing down my Comcast right now, because internet's always been fine. Then today, all of a sudden, it's acting up when they're trying to sell me new service. Highly suspect. I think internet service is crashing. I think that's the next crash during this next recession. I just got off the phone with a guy who told me 4.875 right now. 1, possible, depends on the scenario. 2, is there points and is there fees, right? I could tell you 4.375 right now. Whatever that scenario is, I can get you 4.375. It's going to cost you, but the rate's not the only variable, right? So if you want, type in credit score, down payment, loan size, some other stuff, and I will price it live on air. Usually been trying to keep these things to an hour, but sometimes you're just having too much fun, right? You just want to stay on and just have fun. Because 4.875 is either got some costs baked into it, or it's a big loan amount, and those ones you can go a little bit skinnier. YouTube test price. Let's say you're buying 800 GER, 25% down. I bet you I can get you a 4875 as well. What are the interests for a 40-year loan? Talk to your current servicer when you're exiting forbearance and see if that's an option for you. Because once you exit, like there's not refinances on the conventional side that are 40-year loans. There's 40-year terms with non-QM loans and whatnot, but the 40-year that you're probably thinking of is something that would be offered to you through the servicer. So go ahead and ask them, right, what they have to offer you. Do you provide access to mortgages for investor mortgages, buy and rent out? If not, can you recommend? Yeah, for sure. We do investor loans, all kinds of stuff, the conventional stuff, the non-QM stuff. Just go to greatmortgagebroker.com. Fill out the form. Let us know where you're at, how we can help. We will get in touch. I don't have a ton of experience with HELOC. I mean, a lot of them are the same. You're going to have an introductory rate for 6 months, 3.99, then it adjusts and it's tied to a certain LIBOR or other index. Most of them are adjustable rate. There are some home equity lines that are fixed rate. I refer those to a local small bank. Local credit union, usually best option for those standalone HELOCs, right? Like a mortgage broker can do a purchase where 80% is a first loan, 10% is a HELOC, and then 10% down. Even those are probably less common nowadays because you got to be able to execute and close quick. So we'll just do a 10% down on a lot of those cases and get it closed quick. Closed in September of 21. Home is now worth 40K more. And you got the 2.99. The 2.99, honestly, is probably more valuable than the 40K in equity. That 2.99, depending on how big the loan size is saving you $300-$400 a month compared to what it would be today for that same loan size. Should I refinance now or wait? Jennifer, could you provide less detail? I mean, this depends on a lot of things. I didn't mean to be a smart aleck there. I'm sorry. I'm gonna rein it back in. What's your current credit score? How much do you owe? What's the house worth? Is it your primary property? Is it an investment property? Are you pulling cash out to do rehab? Are you pulling it out to invest? Are you just trying to lower the mortgage rate? Like, I don't know, nothing. What I would tell, anybody helping me with clients is like, we've got to get goals first. And so those are the things we got to know. What are your goals? What are you trying to do? Do you want cash out? Are you just trying to shorten the term, lower the rate? How much cash do you need? What's the cash being used for? All that stuff. BOJIM 2.875 40 year. Yes, sir. That is looking pretty darn good right now. Yep, Eddie, it's going to slow down and move up buyers for sure. For sure. Man, that's a good question, Corey. I'm gonna answer a couple more, and I'm fading quick. I gotta get rolling. I didn't get any other information, but math blogger Danny, 4.875 is definitely available. If you want to buy something for 800, put 25 or 30% down. We could do it for pretty low cost. But again, like somebody who comes to us that's got a 685 credit score and 3% down, it's going to be a different scenario for sure. Zuber negative? No, Zuber's positive. A lot. If Zuber comes across as negative, man, you haven't opened up the internet wide enough. There's a lot more negative on the internet. My buddy Mike Zuber, he's an optimist in my opinion, in a lot of areas. Like that guy a lot. So I don't know where that came from, or it was a specific topic where maybe he was being negative, but no, not negative in my humble opinion. Where was it at? Oh, there it is, Corey. This is a good question. If I had a magic wand, what loan product would you create to help close loans for your clients? This is a great question, and it's going to require a lot of thought. And so I'm probably going to end on this one because I don't know if I'm going to have any brain power left. I mean, the problem isn't, oh shit, I got to stay on for Joey Garassi. I can't leave with Garassi coming in here. All right. Sorry. Sidetracked. Corey, the problem isn't loan products, unfortunately, right? Like I could create the best loan products, but here's the problem. More loan products that help clients, help more people qualify, help them afford, whatever the case may be, is going to be worse off for the market in general because we've got too much demand versus too little supply. So here's the thought. Maybe higher rates crush demand. Not really, but pull demand down, at least to where we have a balanced market. What I've said this before, and I probably get people that just are going to throw rotten tomatoes on stage at me. Everybody's talking about trying to help out first-time home buyers. First-time home buyers have had a heck of a time over the last 2 years getting offers accepted. What I think would truly be a benefit to them, since they're looking at like, man, this is a $2,800 payment. This is really tough. If you created a 40-year mortgage and you were Fannie Mae, Freddie Mac, the big dogs, right? That create vast majority of the mortgages, or at least they create the boxes that we sell them mortgages that fit in these boxes. A 40-year mortgage that had like at market or below market interest rate allowed buyers to buy their first home, only for first-time home buyers, right? That way it solves this problem that politicians are trying to be like, hey, it's impossible for first-time homeowner, someone who's like never had a home purchased, in their household or in their family. These are the people we want to help. If you offered it to just them and you said, like, they've got other programs like Home Ready or Home Possible, you make less than 100% of the area median income, you get this product. And they were given the 40-year loans, not because we want to spread it out and have them pay more interest over time, because there is some negative connotations with the 40-year mortgage, but we want them to be able to enter into home ownership. One, they're going to qualify because the payment's going to be smaller. And two, they're just going to get that first step on the ladder, right? Then after 5 or 10 years, you look back and say, oh my gosh, got extra $100,000 in equity, $100,000 in net worth. It's no secret. Renter versus homeowner, 45 times as much average net worth, right? And that's where a lot of people are being left behind. They don't have the, financial education or, the coaching around credit, coaching around saving, coaching around buying a house where they can make that first step, right? So that first step is too tall right now. It's too tall to go from renting to buying, having to put X% down, having to, have a payment that's over 30 years is $2,400 when, your budget only allows for $2,000. Give them a 40-year loan. That's that $2,000 payment. Let them get on the ladder. If they're on that ladder for long enough, i.e. 10, 20, 30 years, generational wealth happens, right? They have a higher net worth over time. It's not my opinion. It's fact. All right. Enough on that. I think that's what I would do. That was just something that came to me off the cuff. All right. Related to that one, and because he's my boy, I want to answer Joey's question. When do you think 40 years will be offered as conforming loans? By the end of the year. I'm just going to go out on a limb. I mean, I don't think I think there's more upside than there is downside. I think the problem, Joey, is that if it was me, I wouldn't roll it out to everybody. I wouldn't roll it out to investors because it's going to create bad investments. And I wouldn't roll it out to everybody. I would roll it out to first timers only. Final answer for today. Things might change. Check me out next Monday at 3 p.m. It might have changed by then. I appreciate everyone that joined. We almost got up to 100 people on today's stream. So invite your friends, family, coworkers, cousins, everybody back next week. More than happy to answer any questions that come across. I enjoy these things immensely. These things get watched on replay. And I've been looking at some of the stats where hundreds and hundreds of people come and watch these, a week, 2 weeks after they've been posted. So come on live, ask your questions, know that like the question that you have is going to be one that other folks have. So I appreciate it. And I'm going to keep doing it every Monday at 3 p.m. Pacific Standard Time. Count on me being here. Matt, the Mortgage Guy, live every single Monday. 99 viewers. Invite a friend. Let's get to 100. Holy moly. All right, back down to 95. I better get out of here. You guys have a great day. Until next week, we gonna see.